Well, what bankers usually are looking for, they are looking for stable values and stable cash flows. And if I have just a look on the Paris market as it is at the moment, I think there is good reason to believe that the real estate fundamentals, in particular vacancy rates and rents, will certainly come under pressure, because it's I think a natural process of an economic slowdown that sooner or later rents and also vacancy rates will react. However, I would like to bring it a little bit in perspective, because first of all, Paris is not France. We have in Paris the situation that we have about 35 or 40 CAC 40 enterprises are located in France. About those 35 companies, about half of them are producing 80% of their turnover figures outside France. You have multinational groups that are doing business abroad. About those 50% I mentioned, about 2/3 of them, they are even have a large majority of their turnover even outside Europe. And I think this we have to bring into perspective. As you stated in your initial statement, we have an office stock of 50 million square meters, and we have a vacancy which is still relatively low. We have an annual takeoff of 2 million square meters, which is as much as 3 or 4 of the so-called big 7 cities in Germany altogether every year, despite the economic downturn. We have a tremendously diversified tenant market with a percentage figure of 70 or even 80% in the service sector, which is not directly affected by the industrial slowdown at the moment. So yes, there is a cyclical economic trend which is not positive in France at the moment, but France and the real estate market in France has always been cyclical. It is a matter when to enter the market, but fundamentally, I think if you are an international investor and if you're an international bank, you cannot escape from the French market for very good reasons.